Hi, this is Keith Schneider, CEO of MarketCage.com, and this is May 29th edition of Market Outlook. So quite a powerful week we had. Let's get right into the charts. First of all, I've put in, this is an S&P chart along with our new real motion indicator. Let's take a look at what the charts are telling it. This chart is showing. First of all, I put in this trend line here. As you can see, it stretches all the way back to April of last year. And look, we've got 1, 2, 3, 4, 5, 6 points. That's a pretty powerful and valid trend line. And in fact, we've made new lows from here. So you really have a succession and a nice trend line set up. That's a very valid technical trend line. Now, we've closed above it, at least on Friday. So an indication that we're breaking out after sort of a flag or consolidation pattern all in this area. So you got some power to certainly move up. Now, let's take a look at some critical levels. First of all, on our real motion indicators, if we get beneath, and let me put this in again here, highlight a particular area. If we get beneath this level here, which is about 1% from the close on Friday, or 1.5%, it might be a failure. So you got a really low risk type of play setting up. If you want to play a little bit longer term and give this thing a little bit more room, a move back down about 3% from current levels would put you under the 50-day moving average and fail on momentum as well. So there's your current setup on the S&P. Now, let's take a look at little big view and some of the sections over here. So first of all, let's highlight a couple of things. You can see, first of all, the Russell here. We got 4 accumulation days. 3 of them were put in last week. So powerful move up in Russell. Again, NASDAQ matched it as well. So powerful move up in NASDAQ, moving it up over 3.5 or almost 3.5% in both of these indices. And notice how we're getting some decent accumulation patterns. So good volume starting to come in. That is an important factor here. Let's take a look at some of the sectors here as well. Okay, first thing to note is that semiconductors is moved up to 4th place. Now, it had a powerful move up this week, right, on the heels of both AMAT and NVIDIA. So you got some really good participation of individual stocks in the semiconductor area. And what's good about this moving up in the ranks and getting a powerful move is that this is a more speculative sector. That means good speculative money flowing into the markets, and that's the type of money that can really propel a good move. Meanwhile, though, what is still the factor is XLU, XLP, and IYR are, well, certainly XLU and XLP are more defensive sectors. So we'd like to see semiconductors move up. So what's interesting is that both more speculative sectors along with the more conservative ones are at the top ranks in the sector rotation concept. And that gives you a good indication of what might happen next. More speculative money starting to come into the market means it could propel a lot higher. Okay, let's take a look at a couple of other things here as well. Sugar, right, is doing quite well. Actually, for this year and over the recent 6 to 8 months, sugar is trading at highs. And you can see we're in a bullish phase, up over 24% over the last 3 months, 18% over the last 6 months. Money flowing back into commodities. Another thing to take notice, as the market now is on the verge of really breaking out through that big trend line, metals and metal miners are taking a pause. But let's not forget, the big trend still very, very strong. 6-month rate of change up over 60% for this year to date, or virtually this year to date. That's a pretty strong move. So overall, corrective phase in metals and gold mining, where agricultural commodities are looking a bit better. So the question remains, is the Fed behind the curve on getting a potential inflationary move under control? So looking at that SGG, sugar is a good proxy for agricultural commodities. They're acting firm. All right, now let's take a look at the market internals here and see what they're telling us as well. First chart, let's take a look at the S&P. And what we have here is up-down volume. Let me inflate that a bit or enlarge that chart so it's easy to see. Okay, a couple of things, right? You can see we got oversold, and as we move back up over the midpoint here, right, this blue line here is really where we get a bona fide buy signal. And this is our 5-day up-down volume. Volume is looking pretty positive. Now, another thing to note, when we get really overbought, very strong, it often indicates a strong market and potential sideways to work off the overbought reading. But when you get really extreme, that's a positive. Not quite there yet after this signal in the spiders. Now, McClellan oscillator also on this rather mild sell-off got oversold. And again, as we turned up this last week, really powered up, and we crossed over the zero line or the midpoint, and that spurred this rally. So market internals looking pretty good. Not really overbought in the spiders at all. Now, looking at advanced declines, they're not quite reaching the levels, right, off the absolute lows, but again, above the midpoint, above the 0 point here, and with this week's action, really put in what I would call a buy signal across the board on the market internals in the S&P 500, right? We're all across the midpoints. We, on the McClellan, this indicator here, this is the McClellan indicator, looks out over the next 3 weeks to a month or so, and obviously crossing that midpoint after being oversold is a buy signal, and there you have it. So market internals, looking at the S&P, a real positive. Okay, let's go to our next chart, which is the NASDAQ. Now, this is a significant change and very important to note. And that change is this huge move up in volume. Look what happened. From here, we sort of got a buy signal last week as we crossed the midpoint and really powered up. And this is about the most overbought, or the strongest we've been in up-down volume. So when you get that strong and you back off, it's not surprising that the sell-off is rather mild or sideways action. And in fact, in this case, after we got really overbought, we basically worked our way sideways for a couple days and then powered up again. And this is something that can certainly happen here. Now, the other thing is, look what happened with advanced declines. Remember, this was a lagging index. So that really caught fire. You made huge progress this week on this move up, as opposed to sort of languishing like we had down here. So big improvement in market internals considering up-down volume. Our McClellan oscillator, which looks at advanced declines, definitely now above the midpoint for the first time in about a month and a half on this rally. And the advanced declines on a shorter term basis, on a 10-day basis, also powering through. So classically, we're looking pretty good, running maybe a little bit rich on the up-down volume, but overall, the perspective of the NASDAQ has changed significantly with the action from last week. Okay, let's take a look at a couple more charts here. This is the S&P, and it's a new high, new low ratio. And as you can see, we had been running pretty rich here, and at the same time, sort of rolled over. I was a little bit concerned that we would drop through this 70 level and had rolled over. So again, this is sort of a tentative indication here. Don't like it trading down beneath that 85 level. So, the market had been so strong on this rally. It's not surprising trying to make, again, a lot of new highs after such a move up where a lot of new highs were hit. It's not surprising. Really don't want to see this come through the 70% level. So this is a bit mixed on the S&P. But the action in NASDAQ, different story. Remember, NASDAQ had been our weak sister here, and that is showing some real nice signs of strength. Look what's happened here, right? Rolled over again, only where it was able to get up to the 70%. And as this market sold off and then went sideways, we had a really strong recovery. So if you imagine just a sort of a moving average of this new high, new low ratio, we certainly turned around, flipped around, and that is a good sign for the NASDAQ, and this is the NASDAQ 100. So I see a lot of improvement here, and as we backed off, got almost to what I would consider an oversold level, reversed just on top of that, and now moved up rather nicely. So again, NASDAQ in much better shape than where it was just last week. Let's take a look at some other indicators here. Let's take a look at volatility. Now, this is my actual biggest concern. Why? It's really quite simple. Look at this. Down here, we're trading at the bottom of the Bollinger Band, right? So it's pretty damn close to almost all-time lows when looking back over the last couple of years. So excessive optimism from option players is a contrary indicator. Obviously, it can continue to go down, but we want to watch and see if it pops back above the lower Bollinger Band, and that could be indication or a short-term trading signal that the market's been too frothy up here and it'll back off. So let's, use the website, and this is updated every day so you can see how this thing is playing out. Let's take a look at another indicator of sentiment, and that is short-term volatility versus longer term. As you can see on this particular chart, we're in the upper regions, but again, this is a scenario where the market has basically changed direction and moved back up. And until we reverse, this is now a real good positive. So again, all of the action last week confirmed with positive movement in the volatility ratio here. So everything is in gear. That's looking positive. Obviously, we can get still a lot more overbought as we move up, and we want to see the market tell us and actually roll over. And at this point, even though we're in overbought readings, we certainly can get more overbought and hit this 130 level, 1.3 level actually. This is a ratio, so 1.3 is, I wouldn't be surprised if this market continues to move up, that we really hit the super upper extremes. But meanwhile, all the moving averages, the actual calculation of the ratio is all intact and positive. Again, another positive indication. No divergence in the indications from the 3-month to 1-month volatility ratio. It's bullish and continuing on its track back up. So until those moving averages roll over, we're going to stay positive on this indicator as well. So if you look at the overall picture, you can see that there is a tremendous amount of improvement. The biggest concerns that we have are that things are running a bit rich, as I showed before, in the Bollinger Band on the short-term volatility, and the fact that we broke out above that trend line and we really have to stay above it and clear it. Otherwise, if it fails from here, obviously you've got a long way to go. So again, price action rules. What we're trying to do is look at the market internals, look at various indicators to see if we can really look at and take a pulse of the health, but we're trading price. So ultimately that tells us what to do. And we determine obviously the levels from there. So again, on the real motion indicator that we showed on the S&P, a sell-off of 1 to 1.5% from the closing levels of Friday would be cause for concern, right? And a potential failure of that upper trend line. On the other hand, real bona fide break of the 50-day moving average is 2 to 3% lower from here, and that would be much, much more meaningful. So each one of these type of levels you can use depending on the type of player you are. Shorter term players might want to take probes with tighter stops. Longer term players, if they're bullish, might want to give it a bit more room. Okay, that's it for now. Hope this helps. See you next week. Stay frosty because we're certainly at really interesting levels.